Okay, hi everyone. Good morning. This is 21st of March, Saturday morning. Okay, basically many has been asking about when is a good time to buy and how do we know it's the bottom. So probably I'll just do a quick video and share with you based on the past historical reversals. Right. So from there we probably get a better gauge on what comes before the market does a major reversal. Right. Okay, just to put it in perspective, this is the SDI chart. Let's look at it from the weekly perspective. All right. So from the highest point, which was in 2018. So if you look at the highest, the decline from the top right to now is about 30%, right? 36%. So this is what is happening at this current moment, right? For this super bear market. Okay, now let's look back in the past. Right, the last time we had a big fall was in the financial crisis. Okay, so that was back then in 2017. Sorry, 2007. Yeah, which I think some of you have not even experienced this. Okay, but just to look at it from the highest point in 2007, okay, all the way down before there was a major reversal, it was 60%. So if you look at where we are now in terms of the decline, right, we are about slightly more than halfway there, okay? Okay, let's look at one more, okay? So that was during the SARS period. So that's something that a lot of people are making some comparisons with. Okay, so SARS was back then in 2003. Okay, I think this one, even more people will not have experienced that. Okay, so I had experiences back then in 2003 and from then and 2007 and now. Yeah, so back then in SARS period, right, you can see the market came down by about 34%, right, before there was a major reversal and which led to the super bull market all the way to the before the financial crisis. Okay, so if you look at it, right, so depending on how you compare, right, some will be saying this is like SARS, all right? So if it is like SARS, the economic impact, right, we are down 30%, we are now very similar to where SARS is, right? Okay, but if you say that no, this is worse than the SARS period, it's like the financial tsunami that is down 60%, then we are probably only halfway there. Okay, but again, all these are just guesses, right? Guesses will not bring us anywhere. So I think what we need to focus is what the market is actually doing, right? So we take cue from what the market participants are doing and respond accordingly. Okay, so the best way to look at it is to look at the past, right? History repeats itself. So just to look at these two previous cases, what was the similarity, right? And if the same happen again, most likely there'll be a time where it indicates the market reversal, right? Okay, so take a look at 2003, right? So during the SARS period, what happened? So I'm going to zoom in now during that period. So what would be the thing, what are the price action that you see, right? Before you see that reversal coming in. Okay, so this is the SARS period, right? 2002, the market was downtrending strongly, like what we're seeing now. Okay. Okay, now during this period, right, you notice that coming into the mid of the year, right? So in mid 2003, right, June period. Okay, what happened is the market was keep forming new lows, yeah, even new lows. So the reversals like this, the rebounds like this are very common, right? So you see rebounds, you see the market rebound, you see the market try to do rebounds all the time, but each time just keeps getting attracting new sellers, right? And it goes down further. Okay, but what happens differently in towards the mid of the year, right, 2003, was that the market this time refuses to go anywhere lower than the previous one, right? So this is what we term it as a double bottom. Okay, so double bottom is a very good indication that the bear market is more likely to be over, and if it's able to break out, right? So it's able to break out of the previous high, then this is where the reversal will be more likely to be a genuine one. Yeah, so the breakout happens here, right, near June, right? This is where from then the market starts to have a major reversal. Okay, so this is what we call a double bottom. Okay, now very quickly I move to the period in 2007, right? So this is where the financial crisis was. Okay, so you can see over here. Now, so very similarly, right, the prices were falling. So you can see that it's down one straight line week after week, week after week. Very similar to what we have now, right? The prices were all coming down one straight line for the past 3 weeks. Yeah. Okay, so but what we can see is now when you are over here, this is what we may expect, right? Market to have some form of a rebound. Okay, but rebound, it could be there all the time. Yeah, so the difference this time is, right, when you try to go up, and of course it's going to meet some selling, right, and the selling pressure came back, right? If you were to go lower, then the downtrend continue. Okay, but as we've seen earlier, double bottom. So if the market is able to break past this high, this resistance, then more likely the market will have a strong reversal, right? And this will lead to the change in trend. Yeah, and this is what we saw back in March 2009, and this lead to the strong bull market thereafter. Okay, so I think the point of this video is to highlight that right now, if you try to buy any stock, of course, the risk is going to be very high. It's not going to lead to a major reversal, right? So what do you need to see first is there will be rebound, technical rebound, all right? Do not be caught by it. Okay, wait for the next sell down. If the next sell down go lower, then it's not the time yet. But anytime we see the sell down not able to go much lower than the previous low, and the subsequent weeks starts to rebound and is able to go past the high, then we're talking about a good time to enter the market again, at least to buy. All right, so for now, stay safe. We'll look at more opportunities in the market in the next video. All right, so stay tuned for that. All right, thank you.